Can you believe it's August already? As most of us swelter, the summer heat isn't the only thing making investors sweat. Hi, I'm Jeff Jr., and welcome to Trajan Wealth's monthly market commentary. We're covering July's market moves and outlook in just a few minutes, so stand by. July had some jittery moments for sure. U.S. Treasuries, they rallied while stocks swung between gains and losses as investors digested new comments from the Federal Reserve officials and data showing slower growth in the manufacturing sector. Despite a 12.6 rise from its June 16th low, the S&P 500 still risks an ugly stretch ahead. Wall Street folklore has it that October is one of the worst months for stocks. It's when crashes were witnessed back in 1929, 1987, and the infamous 2008. But actually, August and September, they're typically worse. We're probably going to be facing difficult times ahead. However, if there's anything that can make or break your success in the next few years, it'll be having a well-balanced portfolio. Because so many of the trends that have favored stocks are at the risk of reversal, only a genuinely balanced portfolio will provide you with enough power to handle whatever comes your way in the coming years. So, what would a balanced portfolio even look like, you ask? Now here's our macro advice. If inflation remains high, which it probably will, this means that it costs a lot more to borrow money. On the consumer level, if you buy a house and you pay more interest, your payment is obviously going up. Now the same applies for businesses that have loans. Unless you have an appetite for volatility and are long-term, stay away from companies that aren't profitable and depend on loans and have what's called a cash burn. Typically, these are smaller, emerging tech companies, at least for now. Now, if growth is weak and inflation stays high, which is feasible, this is called stagflation. In a stagflation type of climate, both bonds and stocks, and even commodities, will likely take a hit when experiencing stagflation. There aren't too many places to hide in this type of investing climate. So the best advice I can provide is to remain patient and don't make any hasty decisions that will hurt your long-term retirement goals. The tide, it will turn, I promise. Now July, it was a good month, make no doubt about it. But the next few months are going to be choppy. But it looks like the earnings are holding up too, so time is going to tell. Just make sure you rebalance your portfolio periodically. Now let's say every quarter or after an asset class experiences a significant move. Now rebalancing, it means that you will buy more of an asset class when its price is dropped and less when it rises. Your actual allocation may be way off from the target amount, so getting back to you originally wanted is very important. If you're a client of Trajan Wealth, we do this for you automatically. But if you're not a client, our advisors can help you stay on track and reach that desired target balance. Call us anytime. We're fiduciaries and we're here to help. So until next time, take care.